Screens glow bright, yeah, the market's alive. Trading ranch riders were built to survive. Ranch mode on, never break, never fold. Stacking these wins like silver and gold. Bots in the back, charts burning the road. We ride the momentum, that's ranch mode. Click, load, execute, trades locked in. Every breakout we chase, every range we pin. Profits the target, wrist tight in the holster. Momentum's a beast, but the ranch is the closer. Dust on the boots, caffeine in the veins. Staring down futures, taming the chains. Chaos turns calm when we grip that chart. We don't play the game, we tear it apart. Ranch mode on, never break, never fold. Stacking these wins like silver and gold. Lights in the back, charts burning the road. We ride the momentum, that's ranch mode. Options and spreads riding flames through the night. Future stampede, gotta hold them tight. Discipline steady like a hand on the rein. Every candle's a signal, every tick's a gain. No panic here, we don't sweat, we don't shake. Even when the charts quake, profits we make. Legends aren't born, they're built in the fight. Trading ranch forever, keep the fire alive. Lock it in, ride it out, let the profits reign. No fear, no doubt, only fortune gain. Ranch mode, screaming it loud. Trading ranch forever, stand tall, stand proud. Ranch mode on, never break, never fold. Stacking these wins like silver and gold. Lights in the back, charts burning the road. We ride the momentum, that's ranch mode. Switch it on.
Morning, y'all. We'll get the tunes turned down. And good morning to Andy, Tony, Miss K, and Mandy. Y'all are the first bunch here, letting me know that y'all are ready for the market. I love that. All right. I was having problems with this. Yeah, it's still doing it. So last week I changed my layout and it's giving me a little bit of grief. So I might have to keep restarting it if it freezes again, but that's all right. I kind of figured out how to hobble along with it. So I do have the charts. I went ahead and started marking them up, but I think we've got to start with news, especially given that we had a lot over the weekend. So yeah, the US-Iran talks collapsed. Y'all probably noticed that. That's what the gap down was about. So very, very high stakes. Obviously, we were talking about this last week, so it was very fragile and delicate. So basically, they had their negotiations and it ended without a deal. Iran saying that the US demands to halt nuclear development are completely unreasonable. They're not going to do it. Vance posted it. There was 21 hours of talks. And then we had Trump threatening to finish the war if talks fail. So we didn't really like that. That he would get it ended with or without Iran's cooperation. So obviously that is very unstable, and that's what we're seeing on this gap down. There's also a little bit that we haven't even been talking about this because there's so much going on with Iran, but there's been a Lebanon humanitarian crisis that's getting worse. It's when we see Israel going through the news, it's a lot of that too. But then we had even Pope Leo, 14th, say that he is calling for some global peace vigils. Even he's had enough with all the silliness. So basically the takeaway is that the geopolitics are still our number one driver. We've got some news and data this week, but without the Strait of Hormuz being reliably open, it's a little crazy out there. The energy, so we've got, obviously we're index traders, we're looking at the index a lot, but there's a lot of energy play is going on right now too, with crude up, crude down. Crude now is back over $100. It's around 104, 105 this morning. So I don't know if y'all been booking flights. It's affecting that. Not real fun. So I'm almost to the charts, but real quick before we get to the charts, let's look at kind of the minefield that we have other than the geopolitical news this week. Not a lot. It's pretty quiet so far. The only planned red folder news tier 1 kind of thing we have is the core PPI and PPI month over month. We do have some orange folder later in the week, but this is the kind of market that would just float on whatever it's got going on. Right now, what we have going on is extremely volatile, so it's not so much going to float as reacts to all of those crazy news headlines. So, now that we're finally back at the chart, let me kind of show you what I'm looking at. And I hope that y'all have kind of noticed that on Mondays, I'm looking at not just today, but kind of getting an idea for the week ahead. This week, I'm not quite... I don't know. I'm kind of waiting to see what happens with this gap. So I've marked our weekly gap in yellow as always. And our midpoint is kind of right at this level. So I went ahead and marked it, the 68.22. Last week I was watching the 68.15. This is going to kind of be a really important area to watch. This really could be our line in the sand. Go ahead and I'll make that a good little sandy color. I think we were using this one for line in the sand. So basically this is where my bias is going to be most easy to flip from bullish to bearish. And there's a little bit of, I might have a line in the sand consolidation area. I'll explain that. But basically, if we're able to hold, right now we're holding the 6,800. We dipped below. I marked our pre-market low there, but right now we're kind of holding above the 6,800. If we kind of hold this area at open and start breaking the 68.15, then that really opens up a move to this high. Now we've only got 15 points here, so it's going to be a little bit harder to catch. But in general, if we're going to have a bullish bias and be looking to buy the dip, we don't want the market to be staying underneath this gap midpoint and this structural level that we had put in last week, because that really is the resistance right now. So if we do get over that, we've got the obvious little 68.31. The next level is going to be this level from last week, the 68.47. You can call that 68.50. It wouldn't hurt my feelings, but that is obviously a really important spot. Once we, that was our high. And then once we broke above it, we held it. And so I talk about this a lot with the level to level trading. When you have any kind of key level that you're watching, if it's a structural high, swing high, a wick, or a data candle, data midpoint, any major level like that, once you break it and then find it as support, that's going to be an important level to watch. So I have that marked as purple right now, which is a lower priority level, but I'm going to upgrade that one to pink, even though I'm kind of in my head, I know that kind of goes up to the 68.50. Okay, so basically that's our next level ahead. If we keep holding the 68.20, I think we're going to go for that 68.31. Might have a speed bump there, but then that next target's going to be the 47.50 area. If we keep kind of squeezing, and this would, I think, be on some good news, which we're not having yet. So that would be if we have some improvement in the situation, that's when we could keep looking to push, potentially short squeeze. The big level, if we're going for even later in the week, is going to be this magnet up here around 6,900. We've got the highs up there to test around 68.88. So we've got some really obvious bullish targets up there. We would really have to squeeze to get there today. It would make more sense to kind of test even the gap up there would be a little bit bullish, but to just kind of test the high, test up there, that sort of thing. So if we lose, if we lose 6,800 and especially this little smaller level down here, the 67.93, I just can't keep looking for longs unless we're looking for a big, like lunchtime reversal or something like that. So if we can't hold that bullish area, we definitely have a bearish move setting up here. So if we can't hold above the 68.15, Or we could even reject up here at this 47 level. Those are kind of some good bear setups off of the bullish idea too. But if we ever start losing the 6,800, that's going to open us up to real quick test the 6893 and potentially retest the 68 or 6780s. This was a really important level that we were watching last week for support because we had that little wick down there, and everything ultimately held. But I'm looking for that to be a key level. So if we lose 68, 60, I don't even know where we are in space. This market is so wild. If we lose 6780, then I don't know, it's looking a little dangerous. We do have that low there to check. If we, sweep liquidity and start coming back up, then that would kind of show that we're finding some support down there. But if we don't get below, then we're just going to probably keep walking down. So we've got other levels down there. The big support we need to watch is kind of this area. There was a whole cluster of areas. We talked about this last week too. We had some hourly support, and then we had the taco trade from a couple weeks ago, 2-3 weeks ago, I think. That was the high from that. So we've got a cluster around 6750 that should be really serious support. That's kind of like getting to these upper sides over here as well. So this would kind of be a natural, normal range for the market. If it does keep getting ugly though, we could lose this support, and then we're going to start looking, we had kind of looked at the fibs of this data candle last week, but that kind of puts us right down at that 6720. When you put the fibs on there, these are really close to these levels I pulled. So we're watching those. And then of course the 6700 all the way down there. Hopefully, the market wants to not be too aggressive in either direction so far, because like I said, our actual data catalyst are still later in the week, and we're reacting to some pretty negative, uncomfortable news this morning. So, chop. I didn't really talk about a chop zone, but I think if we do chop, the ugliest chop zone would just be this right here, this little 30-point area from 6,800 up to 6,831. I don't know. I think we have enough volatility on the news to break us out of that area. The wider area to watch would be this gap. And I need to do a lesson on marking gaps because everyone does it differently, which, okay. But we should mark from the close of Friday to the open on Sunday. And that's what I've done here and where I pulled that midpoint. This gap could also kind of potentially act like a range today. So there is definitely a threat of choppy range. That's why I haven't gone too nuts with these squeeze or capitulation targets here. But it'll give us something to play with. I think today's gonna, instead of coming into Monday morning thinking here's the plan for the week, I think we're looking at here's Monday morning. Let's see what setup today gives us. You have so many horizontal lines on your track. How do you keep track of them all? Well, I want to point this out. This is an hourly chart, so it's not that many horizontal lines. And y'all are going to go zoom in on, you're going to zoom in on a minute and drive me crazy, some of you. But, I'm looking at this on the 5-minute. It doesn't look like this at all. These are just macro levels. How am I keeping track of them? I look at the hourly chart. Go over here to a 5-minute. Doesn't look like much at all. How much is that? That's not that much, right? Not so intimidating now. So think about how far apart these levels are. If you're used to NASDAQ, you might see these 15 points apart and think, oh, that's not very much, Barbie. But you got to multiply that by 4 or 5 to get to a NASDAQ figure. So it is. It's pretty good. Before I leave, we'll take a look at the whole index as a whole here. Oops. Because I like to check in with VIX. Of course, VIX is moving around, and it did have that gap up. We were below 20. Now we're back over 20. This is kind of our normal range, though, with Trump, is to be up here. I mean, a high normal is in the 20s. So that's okay right now. All right. Yeah, we do have another gap down lower. I don't want to worry about that one just yet. That would be if we start getting a little bit ugly, but we do have some more gap levels down there. Y'all are so aggressive though. We're talking about today. We're talking about opening the week. We don't need to talk about SPX 0. So yeah, I'm gonna fight back a little bit and say this is not a lot of horizontal lines. I don't know why I'm losing my voice already on a Monday morning, but these are all important key levels, and this is an hourly. So keep in mind when you chart on the hourly and you're charting all these big highs and lows, it doesn't look like that much. But as far as keeping track of them too, a little tip that I have on TradingView at least is you can turn on the global sync. So what I do is you can see this is the ESM. So this is our quarterly contract. And I chart all of my levels on the quarterly contract. Because then if I just want to see a real clean chart, I can either turn all these levels off and hide them real quick, or just flip over to the continuous, and there's your super clean, boring chart. I can do that super fast. Put a fib on something. We did this last week. I put a fib on this. I told you this is an hourly. It's a 30-minute. I lied. But it's the same kind of idea, 30-minute. Sometimes I watch the 30-minute because if you think about it, the New York session is broken into 30-minute chunks, not hour chunks. So that's why I do that one. Yeah, this is not. I've had this criticism before too, so that's why I'm not like. I'm kind of used to this, but people will come in here. Oh, that's analysis paralysis, Barbie. There's no way you could trade like that. And these are hourly levels, so these are spread out. We'll go to the 5 minutes. It's gonna look way different. All right, so I chart ES because that's what kind of. If you're talking about really volatile stuff, that's the NASDAQ. The Dow's less volatile. The ES is in the middle, but it still shares a lot of stocks. And so it's kind of one of the most reliable to find the levels on. And then I can even, when we start getting up to support and resistance on ES, I can trade the NASDAQ off of it too. But we will be in Discord. I'll post y'all that link. If you want to get in free, that's the link you will need right now. I'm not going to stream the New York Open today, but I will be in the Discord chat. I'm not going to stream it live here, but I will be over there today. So thanks for joining me on the pre-market prep, y'all, and I will see you real soon.
Every trade's a gamble, every risk's a ride, but the ranch don't flinch, we ride side by side. Ride the risk, yeah, we tame that storm. Profit in the chaos is the rancher's form. High stakes, cold nerves in the pit, we persist. Legends never fold, we just ride the risk. Charts whip fast, volatility wild, but we hold our ground. Trading ranch style, candle by candle, momentum we chase with precision and patience. We win this race. No sweat drips, no panic in sight. We cut through the noise, see the levels right. Others get wrecked by the fear they chase. We rope in the profit, steady hand, steady pace. Ride the risk, yeah, we tame that storm. Profit in the chaos is the rancher's form. High stakes, cold nerves in the pit, we persist. Legends never fold, we just ride the risk. Options on fire, spreads locked tight, futures gallop hard through the dead of night. Discipline still, patience in the reins, but when it's time to strike, we break the chains. The market's a beast, but we ride, not run. Every loss is a lesson, every win is a gun. Cowboys, cowgirls, we're bred for this fight. Trading ranch riders, forever ignite. No fear, no doubt.